Hey everyone, it is Evan here from the Trade Risk on Tuesday, February 4th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump into our dashboard here. You can see that markets rebounded aggressively to start off this week. 1.5% gains here across the board in all of the major indices on Tuesday's session. And take a look at the 5-day change numbers back in positive territory. This looks very different than just a few days ago when markets were staging sort of back-to-back sell-off weeks. We saw the VIX spiking, fear was in the air, and this market has sort of turned on a dime here and found a bid. We are back above the 10 SMA across all of the major indices as well as the 50. And if we scroll down and take a look at sectors here, a bit more of a diverse mix, but more to the upside now with discretionary technology and materials out in front in the top 3 relative performers over the past 5 trading sessions. On the downside, energy still suffering, semiconductors underperforming, as well as transports all in the red here over the past 5 days. In terms of major markets, silver at the top of the list, which we haven't seen in some time, followed by emerging markets and the S&P. And on the downside, we have oil, which continues to sell off and struggle, followed by natural gas and the VIX. So let's jump into the charts now. Let's take a look at what's been going on here. This is a weekly chart of the S&P 500. We always like to start our analysis here. Each bar represents 1 week worth of trading. And what you'll notice is last week was our first out of character week that we've seen in this uptrend, in this rally since the October lows, where we really started to trend smoothly to the upside. This is the first time where we really got a close in violation of this lower trend line here drawn on the weekly time frame. Notice though, certainly we closed bearish near the lows last week on Friday, but we came again reversing, stopping on a dime here to kick off the beginning of this week. We gapped up on Monday, we added to those gains strongly on Tuesday, and you can see very quickly here that we are retesting and trying to get back above last week's highs and reclaim sort of this slope here that we were rising in for the past 4 months or so. So over 2% gain so far for the S&P 500. It is only Tuesday though, so there's plenty of time left for this weekly candle to look something different than what it looks like right now come Friday. So we do want to keep that in mind, but we can be at least hopeful in the bull's stance here that they are stepping in early in the week. Now we need to see if they can actually hold on to these gains into Friday. And really the sort of narrative that we left with on Friday's recap was essentially that the buyers now, the bulls, were sort of searching for a higher low, and absolutely don't want to claim victory to that yet. But so far it looks like we do want to put in some higher low in some of these markets. And some of these markets have actually already broken out to new highs. We'll look at those in just a moment. But before we do, let's look at the Russell 2000 as our next view. Actually, let's go back to the S&P 500. Let's just throw on the daily chart, because I know a lot of people like to look at those daily levels for the S&P. So if I go back here, change to my other view, this is a daily chart of the S&P 500 now. You can see we held in here around this 3215 level. That's exactly where we would have expected or wanted to see this market hold in, because that was effectively this chop down here and some support from late December. So the market did retest that almost to the T, and it found some support there, again paving the way to the gap up and follow through today. We're not out of the woods yet, of course, so these are the levels we're looking at, 33, 34. Those are the old highs, and it really reminds me of a chart I think I posted on this day here on the 28th of January on the streams. But basically the thought process was that perhaps we've now entered into a sideways range in between 33, 34 down to 32, 15. That was the chart that I posted on this day here, basically saying, maybe we're in store for a 4% range in the near term, that does still seem to be kind of the thought process and potential for this market right now, is that maybe we don't just ignite and break new highs. Maybe we don't totally roll over and start, making a bigger pullback. Maybe it's just kind of chopping here in this 4% range for the next several weeks here before we start to make a more meaningful move in one direction. So again, good progress, worked our way back to the middle of this range, 33.34. If we can get back up there, that's the all-time high retest, and we can pay attention to how the market reacts up there. Now, if we go to the Russell 2000. The Russell 2000 here, again, very swiftly repaired damage done last week. On our weekend video, we talked about losing this 163 level and how this was really not a pretty sight here for the Russell so long it was holding below this 163, 164 area. And just like that, 2 days later, we're back above it. So again, similar comments apply to the S&P 500. Let's see if we can hold on to it for more than a day, but the Russell is back above this level here, which is a good kind of short-term gauge here for the market, a good pivot point, a good just reference point, so to speak, to pay attention to. I like the fact that we're back above it. The weekly chart here of the Russell still on a relative basis is weaker than all of the other major indices, but if we can stay above 163, 164 area, then it can it could quickly be back to acting well again. The Nasdaq 100, though, this is the bright spot here. Take a look at it. The Nasdaq 100 briefly broke its trend line that it's been in since December, so a slightly more accelerated trend line. We looked at the S&P 500 trend line from October earlier. This one here starts from December, and the Qs had basically been trending higher, mostly riding the top end of it. We broke down below it, we chopped around below it, and look where we are here, closing back at all-time highs. So not only has the Nasdaq found a higher low, well, I guess in this case it would be the only market that you could actually claim a higher low has actually been put in here, as this makes a new, as this takes out the prior highs here, solidifying this as a higher low spot to measure risk against. So the Qs acting best still in class here, and if we're looking for this market to continue, I guess we have to look at the Qs here to continue its leadership, because it continues to act well, and again is back to those all-time highs. So that is the market out of, in a nutshell. I don't think we're out of the woods yet. The Nasdaq is definitely the brightest spot, but there are still other places to be, a little more concerned or hesitant to just totally buy everything back blindly and go with this market. But perhaps a two-way trading environment is sort of what we have in front of us for the foreseeable future. Now, if we go into some other major markets here, we look at TLTs pulling back this week. Again, it had a strong 2-3 weeks, so a little bit of a pullback here. Not too surprising, not the end of the world for TLT. Still a lot of sideways supply in here that it needs to eventually get through, but short-term pullback. We'll see if anything else happens with that. Gold, kind of the same thing. This one here pulling back after attempting to break out to new all-time high. In fact, it did get a new closing high here for multi-year high anyway for gold, but that swiftly led to this pullback here to fall back into this range. And it does seem like we have perhaps this maybe upper level consolidation that's going to take place here between, call it 145 and 150. So we can keep an eye on that, but let's see if support over here around 145 holds going forward. And silver also kind of pulling back here in this kind of containing holding pattern that it's been in. Remember, we're still looking for that 17 plus breakout to really get excited in silver. For now, it just looks like it's happy to consolidate and move sideways. We'll see which way this ends up resolving. Last but not least, if we look at energy, USO here has really gotten clobbered. It is down. I think the chart I posted, the stat was 15 out of the, or 16, I guess now, out of the last 18 days, 19 days. Don't quote me on that, but it's something to that effect. It's only had a few up days here. in recent weeks. It is back to an undercutting a very significant spot for USO here, and perhaps this is a small overshoot or maybe a medium overshoot, and perhaps that leads to some type of swift rebound here, dead cat bounce, what have you. But USO very stretched to the downside, coming into some prior technical support for this market. So far, it doesn't seem to care about it. It is just sort of cutting through this support, but let's pay attention to it anyway, and let's be careful shorting this in the hole here after being down 90% of its days for the past several weeks. So that and actually natural gas I think is the last one, and yeah, this one here is maybe coming alive in the short term. Again, this thing is very damaged on all time frames. The sellers have just been in control, dominating this market. But in the very short term, if you're very active and nimble, the fact that we got to close back over here, back above, reclaiming the lows from the 21st and resolving this small consolidation, multi-day consolidation to the upside, maybe that's enough for a little bit of a squeeze here upwards into the $16 range. Again, given the fact that it's just continues to get cut in half every every 6 months, this thing could easily squeeze here 10-15%, and the trend would still be down on all longer time frames and really haven't budged. So keep an eye on that if you're active in natural gas. So that's it for me. That's what I got for the midweek recap. Again, we are still in earnings season, so do pay attention to those earnings dates and catalysts, as market sectors can certainly be impacted by some of those announcements. So that's it for me. Thanks so much, as always, for tuning in and watching. You can subscribe on our YouTube channel or follow us at The Trade Risk. Have a great rest of your day. We'll see you back here tomorrow for some trade ideas.